So let's briefly talk about your supplemental retirement plan. Your personalized D like in David printout shows you your approximate John Hancock balance. When you are ready to retire, you can certainly withdraw your John Hancock retirement account, your supplemental retirement account balance, but you do not have to if you don't want to. Okay. If indeed you want to withdraw the balance from John Hancock, you're going to call John Hancock actually to request an application at the phone number on your screen, or through the John Hancock participant portal, you can also request withdrawal forms on the John Hancock participant portal. You do not have to withdraw your Hancock balance. You can leave that with John Hancock. You have to start taking what are called required minimum distributions, and those required minimum distributions have to start the April of the calendar year after you reach age 72. Okay, it used to be 70 and a half, and it was increased to 72, I want to say about a year ago, maybe 2 years ago. So you don't have to take out the Hancock money if you don't want to. You will complete the application for a supplemental retirement plan withdrawal. You can either take a lump sum withdrawal or you can take installment payments. If you take a lump sum withdrawal, the taxability of that benefit works exactly the same as how we talked about the partial lump sum payment on the pension plan. So you can have your Hancock balance paid directly to you, whereby it becomes taxable income for the year in which you receive it. And John Hancock is required to hold back 20% to credit against your federal income taxes for the year. It's not necessarily that that benefit is taxable at 20%. It's taxable at your own personal income level. That's between you and the IRS. But Hancock will hold 20% if it's paid directly to you. You can also do a withdrawal from the supplemental retirement plan in a lump sum and roll that money into a traditional IRA or a Roth IRA at the financial institution of your choosing. In addition to lump sums, you can also elect installment payments. Installment payments can be monthly, quarterly, or annual installment payments. So you can elect to do installment payments on your supplemental retirement plan account if you like to. You might want to talk with a financial consultant to see what is best for you. I will tell you that the fees that you pay in your Hancock accounts and the investment options available under the Hancock plan, those fees are really low fees compared to industry standard fees. So while you're welcome to take that money out, you might want to think twice. You might want to investigate the fees available with John Hancock and the fees that might be available to you, through a different financial vehicle before you make your decision. And again, please remember, if you're going to leave your money in John Hancock, you certainly have the option of rolling your partial lump sum payment on the pension side directly into your John Hancock supplemental retirement account. Okay. The current contribution rate to John Hancock as of June of last year is $9 an hour on the construction side. I believe the majority of mill employers, it's $1.50 an hour, but there are many different mill collective bargaining agreements. So if you are a mill participant, you might want to check with the contributions department at the fund office if you're not certain how much per hour your mill employer CBA is actually requiring contributions to the supplemental retirement plan. I mentioned on this previous screen that you can register under John Hancock, My Plan for Retirement. These are just a couple screenshots of, on the left, the John Hancock website. You can certainly see your plan balance. There's some retirement calculators out there on the John Hancock website, not on the app on the phone, but on the actual computer website if you log in with a laptop or a desktop computer. There's some retirement calculators out there. There's a lot of tools that can assist you with financial planning for retirement. On the right-hand side, John Hancock has a new, I say new, it's maybe a year old or so. John Hancock's app, like for your phone, the old app was, quite frankly, it was really bad. You couldn't really do anything out there. It took a long time to load. You really couldn't do much except maybe see your plan balance. Their updated app, which is screenshotted for you there, you can get it either through the App Store or the Google Play Store. Their updated app is really nice. You can see your balance. You can log in on a daily basis and see how your balance has gone up or down. And then on this screenshot here, it shows this individual 60% prepared for retirement. We actually send a file to John Hancock of your accrued monthly benefit in the regular pension plan. So the John Hancock app and retirement calculators has on file already an approximate amount that you're going to draw from your defined benefit plan. So it takes your regular pension into account when it's using the tools to figure out your retirement preparedness. We update that with John Hancock about once a year. So the information John Hancock has right now is based on the $100 accrual rate in the construction plan, provided, of course, you haven't had a 3-year break in service. So that's out there. We will update with John Hancock probably later this year to the 125.